If you're in a software space, if you're in a medical space, if you're in a technology space, you can still tap into this.
These budding entrepreneurs are here to learn how to turn their dreams into dollars. This workshop is being run by Perth's Centre for Entrepreneurial Research and Innovation, or CERI.
What we're going to do now is we're going to take our ideas through the lean canvas.
CERI helps high knowledge, high value founders create startup companies. In Australia, we rank number 7 globally in terms of research outputs, but only 30th globally when it comes to knowledge transfer. So we create high knowledge, high value research in Australia, but we don't typically commercialise that research.
One of CERI's resident startups, early-stage biotech company Indepth, is hoping to take their research global.
We've been friends for more than 20 years.
And we both have common loves and passions, and one of that is improving patient care and genes and DNA.
Dr. Svetlana Boltich and Dr. Susanna Lindsay-Temple have developed a DNA test kit they say will help doctors prescribe the right medication for people based on their genetic makeup to avoid the trial and error process.
Using our genetic test and our software, we could basically determine and look at the DNA for that individual and their genetic profile and advise the doctor as to what is the best medication for that patient.
But getting their startup started wasn't easy.
It was 3 years where we were self-funding this company. We were passionate, we believed in what we were doing, but the funding, the opportunities just weren't available to us. And there are lots of good, excellent entrepreneurs and great innovation ideas that are out there that aren't funded.
The challenge with that is that sometimes the startups may end up moving offshore, which is not a good outcome for Australia. We're potentially missing out on successful businesses that could be set up here, generating revenue for the economy and helping to diversify our economy. So we could be missing out on a lot.
It's been a tough 18 months for Australian startups. According to KPMG, total investment more than halved in 2023. High inflation, interest rates and global instability all played a part.
This is a huge concern. I think that, startups have such an important role to play in our economy. I mean, some of these startups grow and become unicorns like Canva and Atlassian, and those startups employ a lot of people. And also there's startups like many of the ones we work with in climate tech, health tech, that are really looking at solving some of the world's leading problems.
There are concerns the situation could worsen if the government changes the eligibility criteria for who can invest in startups. Currently, to qualify as what's known as a sophisticated investor, you need a gross annual income of more than $250,000 or net assets of at least $2.5 million, including the family home. But being a sophisticated investor also means foregoing some consumer protections, and the government is considering whether it needs to raise the bar.
When we came into government, it was off the back of some pretty terrible collapses of managed investment schemes. A number of investors had lost their life savings, and when I talked to Treasury about this, they advised me that the regulation around managed investment schemes hadn't been looked at in over 20 years, and I said, well, it was about time we looked at it.
When it was first introduced back in 2001, around 1.5% of Australian households qualified, according to analysis out of ANU. But today, almost 12% fit the bill, and a decade from now, more than 20% will.
If you look at what's included in the net asset test, it includes the family home, so it wouldn't be many people who own a house in Sydney who weren't pushing up against that assets test together with the income tests. They were set in 1990 and they haven't been indexed or changed since then.
The Australian Securities and Investments Commission has recommended increasing the thresholds to account for inflation, bringing the income test up to $450,000 and net assets to $4.5 million, significantly reducing the pool of eligible Aussies.
That takes it to 2%, so that means 2% of the Australian population will only be qualified to invest in startups, which is a huge problem.
The Financial Services Council has called for a softer approach, doubling the current net asset test to $5 million, but leaving the income threshold as is and grandfathering the changes.
We think that more people should have access to investing in startups with the acknowledgement that startups are inherently risky. We think that most people understand that when they do invest.
We do intend to get the balance right between innovation, encouraging investment, and ensuring we've got the right sorts of consumer and investor protections in place as well.
Gene S is hoping to take their biotech product to the market later this year, thanks to a combination of funding from sophisticated investors, SERI, venture capital, and state government grants. They're determined to keep the company in Western Australia.
A lot of startups either don't survive or they will leave, and that's a sad thing because there is so much potential here.